Welcome to Java. It's March 20th, 2025, and it is also Thursday. Thank you kindly for being here, and welcome if you're new here. We have the Fed finally admitting that stagflation indeed is here. Quite a few things happened yesterday with the Fed on board. We did have our Discord discussion last night. Thanks to everyone that was in there as well. So let's get started, as always, with what's going on in the markets this morning. Now we've got our fear greed meter is at 22. We are in extreme fear territory. It is up 2 points from yesterday, was at 20. So the markets rebounded after Fed Chair Powell. They announced that they were not moving on their interest rates, which we knew would happen. But after he spoke for a while and took questions, it did give a boost to the markets. Now we've got the 10-year yield has dropped. It's been hanging around the 4.3 level for some time. It's down to 4.222 this morning, as well as the relative strength of the dollar. Now, even though the dollar shows it's slightly up this morning, it is in general under increased pressure since yesterday. So with this, we've got cryptocurrencies have risen up to right around 86,000 mark for Bitcoin. Ethereum is still struggling under a bit of pressure. Some positive news for XRP has floated that one and shown that there is more room for that one to run coming in the near future since they have dropped the SEC lawsuit. Now we've got markets at the moment, they went green. The volatility index, or VIX as it is, has dropped. And gold and oil, interestingly enough, gold is above the $3,050 level. We'll see if it can hold here and continue, or if it will indeed come under pressure. We've got the futures also saying that a bit of green is continuing for today. Silver under a bit of pressure. This is with its ties to industrial uses. I do believe longer term silver is a better play. We've got some interesting ratios with it to gold, as well as with platinum and palladium. Both appear to be on sale at the moment. Not financial advice, but you may want to give those a look. So our daily driver right now with Powell and admitting stagflation, which we've been speaking about, we've been in. Now, one moment about that is that if you're not sure what stagflation is, it is the combination of a hit to businesses via slowing growth. And what that means is that earnings will also be expected to be coming down, as well as increased inflation for the consumer. So the combination of the two is a very bad position to be in for an economy. So Powell finally admitted that growth is down, inflation up. We are in stagflation and urging watching April ahead. Now, he didn't say that that's coming from me, but we've got tariffs kicking in on April 2nd. It is also tax month, and historically, April is a weak month for the markets. There are also some other headwinds coming in over this next week or two. So, despite the markets being up this morning, just to keep an eye out for that. These long term, whether you're in the markets or not, they will be affecting you as far as the prices that you pay, as well as job cuts coming out. So the Fed seeing higher inflation due to slower US economy, and they are blaming the ties to the Trump tariffs. Now, this is a misnomer, and when these things happen, everyone begins blaming everyone else. But this has been coming for a long time. The Fed will never blame themselves for their actions for the inflation, which they've been doing over years. This has been a period of years of bad policy, as well as easy money buying votes and multiple other factors. So, with all of this, which is not related to the tariffs, we've got global debt exceeding $100 trillion. And this is along with interest costs continuing to rise. So as these rise, government debt interest costs have hit their highest level since 2007. In the United States, it is even higher than that. And none of these adjustments have been counted in. Instead, when they put out their reports, they simply adjust the way they figure out these numbers. So, got to watch that. For the calendar today, setting ourselves up for False Flag Friday, if you will, because there's nothing scheduled for Friday. We've got initial jobless claims this morning prior to the market to open, as well as manufacturing survey coming out of Philadelphia. Now we'll get also existing home sales and leading economic indicators. Now, the interesting part about home sales is they are waiting for prices to decline, but these are also contingent on interest rates because they affect mortgage rates, but also jobs, because if people don't have jobs or have not had enough savings built up into this, then they cannot qualify for the loans that are coming forward for the homes. So moving forward with the housing, we're watching a softer market coming forward, prices possibly coming down, but sales also slowing because the other factors are not coming into play. We've also got increasing insurance costs as well as property taxes. So these are all moving against the homeowner. So if you are on the verge about purchasing a home, keep your eye out as far as when there are sales going on. They will be local to wherever you are purchasing. Different areas going to be different. We're going to see this divergence more significantly going forward. The weakest markets at the moment being Texas and Florida. So still other areas are growing, and I'll talk a little bit more about that later. So as far as corporates or institutions, 83% coming out in a new report planning to use and up their cryptocurrency allocations in 2025. This is from Coinbase. Now, I believe more than 83% will increase this as they show a need to put these on their balance sheets under pressure from other factors, some of them being federal and some being tax agencies when they start giving them breaks for these assets. So Barron's is reporting federal agencies citing substantial burdens in reinstating fired workers. Now, filing appeals on these are federal agencies. They don't have the concerns with the costs that normal companies do. However, this is showing that there is indeed burden with some of these jobs. And while some of them are necessary and these will have to be worked out in the near future, but that a lot of these jobs that were cut indeed were funded through venues that were unsustainable. So with this, we've also got them coming out saying America's job market is eerily similar to the 1990s dot-com bubble. And yes, it's a worry. So I'm going to pause it a little bit deeper. It actually, as far as the numbers, if you use them adjusted to where they are equivalent in the reports, it is more of a 40s, 1940s prior to that recession that we were looking at, that it is resembling. We've gone beyond the 90s at the moment. So more news about the Ripple CEO, Garlinghouse, is confident that XRP will be included in the strategic reserve and is speaking about an IPO. So XRP again in the news, caution on that one, seriously volatile, but on the dips, could have more opportunities for them, if you will, in the future. Now, I'd like to stop and take a moment to bring forward something else. This particular story is about a cracked version of TradingView. It is a crypto stealing Trojan. Now, what's going on is scammers are posting links to what they're saying is a free version of TradingView, mostly on Reddit, but also on other platforms. Now, TradingView is not free. It's one I do like the platform, but however, watch out for this because it is strung in with malware. And I also want to bring this forward because apparently there are other scammers writing people trying to say that they are me And I will never ask for cryptocurrency. I will never ask you to use PayPal to do anything with that. If you have any questions about this, get hold of me directly. I do have my links below that you can ask me. Never fall for these. I won't ask you for these, and I definitely won't be selling any of these things. So if somebody's asking you in particular about cryptocurrency to transfer anything, don't do it. It's very, very, very likely, in fact, it is a scam. Now, Congress is on track for stablecoin market structure bills by August, according to the Blockchain Association. I've been speaking about the August timeline for several things now. This is running through Congress just to bring in that they will have this stablecoin issuance. Again, it is CBDC with a mask on the face of it. It's painted a pretty color, but it is indeed CBDC. Now, with this, we've got fund managers dumping United States stocks at a record monthly pace. This is in accordance with this graph here is put forward by Bank of America's Global Fund Manager Survey. And it's just showing the weakness going forward and their faith in this. Now, Bank of America also holds a tremendous amount of loans that they're underwater because of the bonds market and interest rates. So keeping that in mind. Now, another one rolling out about Canada. And I am so sorry for my friends up there because you are being subjected to the upper echelon, if you will. They are crushing small businesses there now again. Optimism in Canada collapsing to a 25-year low. This is because they're being oppressed via taxation as well as over regulation. Now, with this, United States, in their attempt to reshore, has actually succeeded in some companies. We can see this with NVIDIA. Came out saying that they're going to spend hundreds of billions on United States supply chain. And this is because partially tariffs, but also because they're facing increased pressure through other competition. And they need to get the backing of the United States again, getting some solid footing there. Now, I've got a few other things to tie into what is going on in the underlying economy and how we can actually see these air markers. Copper price is now hitting 10,000 on US tariff fears, but this is also due to a lot of the other trade wars and things that are going on in the background. It has a nickname of Dr. Copper for a reason, and this is also because there was an investigation launched into the price suppression of this metal. So we can look forward to this in the future. And I believe that the markets will smell out this truth coming forward, not just for copper, but also for other precious metals. So to warn you on this, in the longer term, as we were saying earlier, silver a bit softer in price this morning. It is an opportunity for the longer term. Now, over to what is driving this economy is, of course, two things. First off, war as the cover, but the underlying is energy, which is the base of it all. So with the war, we had Trump suggesting to Zelensky that the United States should take ownership of the power plants over there for security purposes. Of course, we just want to help keep you safe. So with that, let me know what you think about that. When we can't even control what's going on with the power outages in the United States, over 200,000 people without electricity yesterday. This was due to the tornadoes ripping across the nation and more blizzard conditions coming forward. Namely, Shannon, hope you're doing okay out there. We're thinking about you. We've got the European Union to exclude United States, UK, and Turkey from their 150 billion euro rearmament fund. This is kind of another form of war to keep them out of the funding. So, of course, there is the other side. Poland and UK will now be discussing their defence spending as Europe moves to rearm, but they're keeping the funds to themselves. They are going to, does not say here, but they are pushing Germany to be their weapons manufacturer and will drive all of this money that is coming through here, or I should say currency, will flow through that pattern and bolster their economy through this masked quantitative easing that they're putting out, highly inflationary going forward. So we all know what to expect from this. In the meantime, we've got new Russia and US talks set for this weekend. Trump already spoke with Putin, and the two powers will continue to speak more about the peace negotiations in accordance with the envoy. So moving forward, more war will continue. It's kind of what is driving both economies at the moment. So with all of this, I wish you a green trading day going into the weekend. We'll be here in the morning. And until I see you again, my friends, stay free.